Yeah.
So yeah, thanks for coming along. There's a lot less on today's one. I think everyone must start early in the construction industry. But yeah, I don't know if anyone's obviously heard of it in passing, or whether anyone got the email from HMRC that got sent out. But a lot of people, other than that email, haven't really heard a lot when in small business. What I'm going to do is I'm going to try and keep it to perhaps around 45 minutes, no longer. If we can keep questions relating to individual businesses to the end. If you've got any questions relating to what I've perhaps just said, I've got no issues with anyone wanting to chip in. I think we've got the time, although I haven't done any test runs, so don't hold me to that. Yeah, so just sort of chip in if you don't understand anything, and perhaps just write down anything that's specific to your business, and we'll keep that to the end. Okay, so for those of you who've never met me, I'm Chris Drinkwater, one of the directors, along with Wayne and David at RS Partnership. Obviously gone through the question answering. Another thing, you could type your questions into the chat box if you wanted to, you know, or you might forget as time goes on. The materials, what I've tried to do is I've tried to put everything onto the slides, so that we're not giving people multiple different bits of materials and making it confusing. So I've cut in quite a lot of photos and links and other things onto it to try and make it as easy as possible. And I'll send that across to everyone who's attended after this. So the contents, not necessarily in the exact order that I'm going to do it in, because I've put it together in a way that flows and perhaps is more understanding. But what we're going to do is we're going to go through the changes in detail, which is by far the biggest part of today. But what we're then going to do that HMRC don't necessarily go into in much detail at all is talking about how it might affect you in cash flow, your cash flow, what the practical changes are, what you need to do in your software. Very briefly brush over penalties and corrections, because people are going to make mistakes, but we don't really need to know about it until perhaps it happens. And then I've put together at the end a checklist that you can take away and get on with to make sure you're ready. And obviously, as previously mentioned, questions at the end. So the big question, what is it? It's one of those things that can't necessarily be answered in one or two sentences. So it really does need the entirety of this webinar for you to perhaps begin to get to grips with what it is and what you need to do. But the shortest, way that I can cut the long story short is that it's a different way that you need to account for your VAT when buying and selling construction services in your business. And that, yeah, there's no easier way of putting that. What I would say is, previously you might raise a sales invoice and charge VAT onto your customer, and a VAT registered business is going to invoice you, and generally it would have VAT on it. It's almost as if you need to forget those preconceptions and just start again almost. It is a major change. It comes in on the 1st of March. And for businesses, especially small businesses, it can affect cash flow. Some more than others, but we need to discuss it because you need to know whether it might affect you. It applies to VAT registered businesses only, which is a good thing for us, because otherwise we'd have a nightmare trying to apply it to a couple of hundred businesses. So any business and individual who's VAT registered in the construction industry, it only applies to 20% and 5% supplies. So this is standard rate and reduced rate. So 0 rated is not included. It also only applies to those receiving or supplying construction services. What I've done on this page is given a link to HMRC's guidance on it. To be honest, I don't actually find theirs that easy to follow. They seem to dumb it down quite a lot and then not actually talk about some of the the issues. So I think we've put it together in a much easier to understand way. Not going to go over this in great detail at all. This is because, like I said to you at the beginning, I wanted to give everyone some slides to take away from today that give you all of the information. So we're not going to go here and literally monotone list off all of the services that are included in CIS. However, there's one slide with services that are included, and there's also a slide with services that are not included. The only one that is slightly different to CIS, I believe, is sign writing. So, that's something to note if anyone is in that industry. So, when does it apply? Now, it applies when services are in the and suppliers are in the construction industry, as I've previously explained. One way to make it a bit easier to understand is by comparing it to CIS, which is something that you're all already doing. So what I've done is, on the left-hand side, you've got CIS, and on the right-hand side, we've got Domestic Reverse Charge VAT, which is what we're talking about. With CIS, as you already know, it applies to labour. Anytime you are charging out labour as a construction service, you deduct CIS from it. Anytime you are charging out materials, you don't get deducted CIS. So those things, generally, when you invoice a customer or you get invoices from suppliers, it will be split into two lines of labour and materials. With Domestic Reverse Charge VAT, it applies to labour, the same as CIS. It applies to materials as well when supplied with services. That's the big difference. It doesn't apply to materials and goods when supplied on their own. So to make it slightly easier to understand, CIS is labour, yes, materials, no. Domestic reverse charge is exactly the same. However, when packaged together as a, let's say, supply and installation, all of it becomes Domestic Reverse Charge VAT applicable. So yes, if supplying materials only, it still will be, but when packaging it together and actually going and installing something, it comes under. And that makes things slightly confusing for, let's say, an invoice, but I've given an example later on in this to explain that and show how it should look. The big question, why are HMRC doing this? So generally it's for missing trader fraud, which, some of you may not have known was going on. Some of you may have. They estimate that it's going to save HMRC 100 million. I don't really know how they quantify that, but that's what their figure is. I've tried to explain it in a flow chart to make it slightly easier. So this is only a sort of, let's say, dumbed down version. There's multiple different ways that missing traders can operate, but on the left it starts off, let's say, with a one-man band subcontractor who's not VAT registered. They would provide a service under CIS to a small contractor. This is the missing trader in our example. They are VAT registered. So if you imagine what they're doing, they are paying someone to work for them without VAT. They're adding VAT to everything they do and then charging it on to a large contractor. The large contractor pays all of the bills. Missing contractor in the middle takes all of the money and then holds on to HMRC's VAT and disappears after a year or two when they've either spent the money or disappeared. So this is what HMRC are trying to get rid of by not allowing that middle missing trader to charge VAT. And we're going to brush over this, but obviously if I keep talking continuously for 45 minutes, an hour, sometimes not all of it is going to be taken in. So what we're doing is going to give you the slides, plus HMRC have given 2 flowcharts. And what that allows you to do is, when you're sitting there invoicing or making a decision on a quote, you can have 2 laminated sheets of paper with these HMRC flowcharts on, and they're really helpful because they take away the need for you to memorize what's going on. So this one takes the supplier's decisions into account. So as we follow it from the top, all we've got to do is just follow it, answer the questions with a yes or no, and it tells us what to do. So does this supply fall within scope of CIS? So this is us providing a service to another company. If the answer is yes, then you follow it down. If the answer is no, then you do normal VAT, which is 20% generally. Is the supply standard rated or reduced rated? No. And you follow it across. Normal VAT rate supply, yes. Then you follow it down to, is your customer VAT registered? And then again, you answer it with a yes or no. If you follow it with a yes, is your customer registered for CIS? If the answer is yes, then final question, has your customer provided confirmation that it is an end user? We're going to come on to what an end user actually means, because it's not necessarily easy. But if that's a no, then domestic reverse charge will apply. There's another flow chart that I'm not going to go through for buyer's decisions, but effectively you have to go through the same process, because you don't just have to worry about it when you're charging out your services. You have to worry about it because people are going to be charging you under domestic reverse charge because you're a VAT registered business that they're not allowed to charge VAT to anymore. So to try and make it a bit easier to understand, we can summarize it in these 3 key questions. Now, obviously, the flowcharts are the best thing to sit there, but for us to understand it today, we can say, is the work a specific construction activity? So you've only been invited here because either you're in the construction scheme, or you provide services to someone else. Basically, we believe that you as a business either are applicable for this new VAT scheme, or we believe that you will be. So is the work specific construction activity? Is the customer VAT registered and CIS registered? Is the customer an end user, an intermediary, or a non-VAT registered customer? If you answer yes, yes, no to those questions, domestic reverse charge will apply. Now, what is an end user? Obviously mentioned that earlier as well. An end user is a VAT registered customer. This is a simplified version of what HMRC have as their definition. A VAT registered customer who is not intending to make further ongoing supplies of construction. So again, think of that flow a couple of slides ago. The end large contractor is the one providing the services to that end user. The middle contractor, that perhaps could be you in the situation, who's providing a service to a larger contractor, there is onward supply of construction services from the large contractor to the end user. If you're providing that service, whether it be carpentry, plumbing, anything like that, to the end user, either to a house or to a business, then and they're not going to sell those services on again as either a bigger package or otherwise, then you have to charge VAT normally because they are an end user. So when do domestic reverse charge rules not apply? So when supplies are made to the following: a non-VAT registered customer. So obviously it would be a bit of a problem if you weren't charging VAT to a non-VAT registered customer, because HMRC are losing money. So anytime someone is an end user or not registered for VAT, you charge normally. A VAT registered customer is not intending to make further ongoing supplies of construction. As just explained, they would be an end user, either an individual or a business who's not in a construction scheme. Intermediary suppliers, connected landlord, tenants, those in the same group, VAT group, business group. We won't go on to that in any detail. Also, any suppliers that are zero rated. So as I mentioned right at the beginning, this applies to 5% and 20%, standard and reduced rate. Zero rated are excluded. So an example of this is new build developments, where all of it is zero rated. And you think, we're going to come on to what that means, but zero rated on the face of it seems the same as domestic reverse charge, where you're not charging VAT, but it isn't. It's all about how you account for it in your VAT return and how you account for it to those customers and suppliers. So we'll come on to that. So what I've tried to do is put it together in some practical changes that are easy to understand, so that you know what to do when you come away from here. So I've explained it, and it may, some of it may, or all of it may have sunk in, but this is what you actually need to do. So verifying customers. At the moment, I would say the majority of businesses don't verify VAT numbers. On the right, you can see the CIS status of customers. That's something that we all do as part of the CIS scheme. But now, what you need to do is verify the VAT status of a customer. Very, very quick. However, it's something now that you need to do. It's an added process. Why? Well, imagine if someone tells you that they're not an end user, they're going to onward supply the construction services, the large contractor. You don't charge VAT to them, you do it under the domestic reverse charge. HMRC later investigate and find out that they weren't VAT registered at all, and you didn't charge them VAT. They will come to you for the extra 20%. So this is the importance of you doing that VAT check. All you need to do is go onto the link that I've put onto this slide, put in the 9-digit VAT number that the business has given you, and it tells you the name and address of the business and confirms that they're VAT registered. So very, very easy, and a little check that protects you from getting done. CIS status of customers. So I've broken this down into existing customers and new customers, because what HMRC are saying is that you don't need to verify the status of existing customers. We'd still recommend that you do it periodically, perhaps every year. New customers, however, you should obtain proof of CIS registration as a contractor. This could verify that they've verified you. And obviously you would always verify your suppliers, because you need to know whether to pay them 20 or 30% under the normal scheme. Now, VAT return. What I've done is you've got a typical VAT return on the right hand side, and I'm showing you what domestic reverse charge will look like. So when you're onward supplying, an example of 25,000 I've used here of domestic reverse charge services to another construction company. This is how it will look on the VAT return, which is, it's in your sales box, number 6, but there's no VAT anywhere. That is dealt with by the person that you are selling to. The far more difficult one is the other side of that, the person that you're selling to. How do they deal with your supply? How do you deal with all of the suppliers that are selling new services? So again, I've used the same example of £25,000 and what it looks like. So it goes in box 7 because you're buying £25,000 worth of services. That could be either materials, labour, anything like that. And it goes in box 4, which is where it would normally go anyway. However, we're now putting it in sales. So you have the responsibility of dealing with the sales VAT for your suppliers. It looks more complicated than it is on here because actually, in effect, all you're doing is just paying someone £25,000 with an invoice that has nothing on it. But it needs to go into your accounting system in a specific way to show up in a specific way on the VAT return. By the way, does anyone want me to slow down because I'm sort of perhaps rushing a little bit? I don't know. Okay, invoicing. What I've done is I've used a typical zero invoice here in a demo company. Now I put this together yesterday, and what I tried to do is make it include most scenarios, or at least a complex scenario. So this sales invoice is under 20% domestic reverse charge. So we've gone, let's pretend that I'm a construction business and I've gone down the flow chart and I've said, right, the person that I'm charging to is another construction company. They're not the end user because they're going to charge on their services. So this is under domestic reverse charge. I'm supplying £15,000 worth of services and goods. That's split into £10,000 of labour and £5,000 of materials. It includes CIS because we're within the construction scheme. So I'm also not registered as gross, so they have to deduct the CIS from me. So on a zero invoice, what I've done is I've split that into supply of services and supply of materials, and put that in as a 10,000 and a 5,000. Where's the difference? As you can see, I don't know if you can see my mouse move, but it's the VAT rate. So instead of 20% VAT on income, or T1 or whatever the standard SAGE code is, there needs to be a separate tax code so that the system can do what it needs to do. As I mentioned earlier, mixed supply. So materials don't come under CIS for the deductions. However, all of it needs to go under with 20% domestic reverse charge. The CIS, however, is only deducting 20% of the labour. So this is a fairly complex, it could be fairly standard actually, to be honest, but I was trying to show you what it looks like and why it's important. If you don't put this to the right place, it won't take the 2,000 off. If you don't put both of these to 20% domestic reverse charge, it won't put it to the VAT return in all the right places. Another important thing that we haven't mentioned yet is you need a statement on all of your sales invoices where you are selling services under domestic reverse charge. There's 2 or 3 different ways that you can write it. However, I've done the easiest one, which is the one that zero default to put in, and that is domestic reverse charge. Customers need to account for VAT on these items to HMRC at the rate shown. So that's you saying, we know that our customers that we're selling to need to account for this in their sales boxes of the VAT return. VAT schemes that are slightly different, and I say different, to be honest, I would say all of you, if not the majority of you, and businesses that we work with, use the cash accounting scheme. So I'm not going to talk about the flat rate scheme because I don't think anyone's using it. But the cash accounting scheme, this is where you only pay VAT across when you're paid. So this cannot be used for domestic reverse charge transactions. So when you're selling your services and materials under Domestic Reverse Charge VAT, it has to hit your VAT return when you raise an invoice, not when you're paid for it. And this may contradict what you're currently doing, but we'll come on to that, so don't worry about it now. This has an impact on the accounting, where some sales are on accruals basis and some are on the cash basis, all on the same VAT return, so it could become complicated. However, it doesn't, so don't worry about that. It's just wanted to put it down. Okay, so something to consider, because if the majority of your work, or half of it, or a good number of it is under domestic reverse charge, all of a sudden you're not charging any VAT to your customers, and that means that you, as a business, may become net repayment traders. And this means that every quarter HMRC are going to pay you money back into your bank account because you're claiming it back on all your materials. However, you're not charging it on to any of your customers, so HMRC are paying you money. Now, if this is a decent amount of money, or considerable for the cash flow of your company, you might want to consider moving over to monthly VAT returns. Bit more of an admin headache, however, you need to add up the pros and cons of doing so. And this can be done by logging into HMRC and changing the frequency of the VAT returns. So I said about, obviously, to make it easier for yourselves, you would have maybe sat in the office or at home, you'll have the two pieces of paper with the flowchart. So every time you're sending an invoice out, you go down the decision flowchart, answering yes, no to the questions, and it will tell you what to do. You also, in the early days, need this chart, which is talking about cut-off dates. Why is it important? Because you're going to have a number of invoices that are spanning this period of when the new changes are starting, and the payment dates of when you're getting your money in may be down the line. So what HMRC are saying is that, the bits that happen before the 1st of March are going to be under the normal VAT rules, and the bits after the 1st of March are going to be under domestic reverse charge, with the one exception in the middle, which is if you raise an invoice prior to the 1st of March, but don't receive the money, or don't pay the money until after the 1st of June, then you have to change it to domestic reverse charge. So, bit of a complexity there. If any of you have got any invoices prior to March and you've got someone who's going to pay you 3-4 months down the line, then this does apply. And we need to know and have it there so that we know what to do with the transactions. Special circumstances, I'm not going to talk about these because none of them apply really, other than perhaps employment businesses. If any of you use recruitment consultants to get any labourers, they're probably going to charge you 20%, and that's fine because HMRC are saying that they're outside of the scope of domestic reverse charge. Utility businesses, public bodies, and planning games are 3 other things, but I'm not going to go into those. Retentions. Now, this is something that perhaps applies to some of you. So this really isn't changing. They're accounted for when paid, unless the invoice is raised in the system earlier. Well, actually, retentions in the future don't really matter when you raise the invoice in terms of VAT now, because they're generally going to be not to end users, which means they may not have VAT on them. So it's not really going to have a dramatic effect on your business. So for tidiness, we might want to have the retention invoices sat there from an earlier date. But that, that's you as a business, so you can make that decision. Okay, and coming on to cash flow as well, which is you know, one of the important things for your business. You need to know what does this mean for our cash flow, because that helps you to operate. Now, what I've done is just given a straightforward scenario of just a big contractor and a small subcontractor. So the big contractor is supplying to end user. The small subcontractor is supplying to the big contractor. The big contractor is still receiving VAT because they're charging the end user. That could be a business that's not in the construction industry, or it could be an individual. They're not having to pay VAT on the subcontractors, however, because they're now under domestic reverse charge, where their subcontractor can't charge them VAT. So the big contractor wins if everyone, you know, this scenario is assuming everyone pays, let's say, in 30 days. They're going to get 20% VAT on all their sales, but they're not having to pay any. So they're getting this, you know, decent cash win in the short term here. Small subcontractors, however, it's quite the opposite in this scenario, because you may have enjoyed the 20% VAT coming in as a bit of a cash flow to help you pay your suppliers and then obviously other bits and pieces that come along, like wages. All of a sudden, it could be that all or some of your sales you're not charging any VAT on, so you're losing that income in the short term. Obviously, that money was never yours anyway, because it's VAT. However, it does help with the cash flow when people are paying you an extra 20%. Now, I think that this is perhaps one of the most important bits, which is the software changes, because this is going to be, if you get this right, it's going to help you just perfectly run the system. If you don't get it right, you're going to have errors left, right, and centre, and you know that can be a problem when we come on to penalties. And I'm going to talk about the three main bits of software, which is accounting software, which is Quickbooks, Sage 50, and Xero. I'm not going to talk about them in any great detail. So Quickbooks, I even looked yesterday, and it still is not ready, unfortunately. So they will be implementing a new VAT codes in the near future to accommodate reverse charge relating to COS. However, we don't have an exact date, and there's lots of forums online where people are saying, you know, what do I need to do? I need to add in a VAT code, and when they've gone and done it, it's put it into the system all wrong. So it's one of those where you don't really want to fiddle around with it. You just need to wait for Quickbooks to get themselves in gear, really. So I don't have an answer for that at the moment. Sage 50. So unfortunately, they haven't done anything specifically for this. However, because mobile phones, utilities, there's various other reverse charge systems out there in the past, Sage 50 do have a way of you manually putting those codes in. So these changes must be made manually, and you've got to make 4 new tax codes, which is you've got to make 20% sales, a reverse charge one, 5%, and then on the other side you've got to make, when you're buying the services, the input tax codes 20% and 5%, both under domestic reverse charge. So that it's putting everything in the right VAT boxes, and selecting reverse charge in the middle there, you can see that should do that. The only other thing that this doesn't do is it doesn't add on, as you saw earlier, I showed you a template invoice where there's some wording on the left. Now, Xero put that in when you select the VAT rates, but Sage 50, you're going to have to change your invoice templates to include that wording. And finally, Xero. So the majority of businesses that we work with use Xero, and I'm very thankful for that, because they're the only ones that have addressed it as a problem, and they've done this like 12 months ago plus. So what do we do? Well, what we're going to do as a business, we're going to turn it on for all of the construction businesses that we got automatically. So you don't actually need to worry about doing anything. Why? Because all we're doing is pressing the button. They've already done all of the 4 codes. It already goes to the right places on the VAT returns. It accounts for invoices, credit notes, and all these things perfectly, as long as you're just using the VAT rates after going down the flow chart that we discussed earlier. The other added benefit is that when you select the VAT codes for domestic reverse charge on your sales invoice, it will add the little paragraph that says that my customer is going to account for the VAT on these. So you are completely compliant for all these changes coming in from HMRC. And another thing is, by the way, they only really work on the new returns, so you need to be making tax digital ready. I'm pretty certain that everyone is anyway. Okay, so just quickly wanted to touch on penalties. Not going to go into it in great detail because, like I said, you don't really need to worry about it until you get something wrong. But just so that everyone can breathe a little bit, there's going to be a light touch in the first 6 months for penalties. So HMRC understand that the difficulties of businesses is that they're trying to implement these changes in the first 6 months, and they're not easy. So they're going to apply light touch, and that means that they're probably going to waive the penalties and let businesses off. To be honest, they're probably too busy with things like furlough at the moment. So I would probably say they're not going to even look into things in the very early days. But don't hold me to that. However, businesses that knowingly claim end user status or any status that effectively benefits them when domestic reverse charge should have applied, the output tax that should have been paid will be liable to penalties, because effectively that's fraud. You're saying, oh yeah, they're an end user, or I'm an end user, and then getting away without effectively paying for the VAT. So obviously they're not going to tolerate that. So penalties, you've got 2 types of disclosure: unprompted and prompted, and they are what it says on the tin. If HMRC investigate you and say, can we check your VAT return, and if at that point you then go and say, oh sorry, Mr. HMRC, I've made a mistake, that's a prompted disclosure, because they think that you wouldn't have owned up to that error unless they looked into it. An unprompted disclosure is you on perhaps the next VAT return or in a letter to them saying, yeah, sorry, I've made a mistake, but we corrected it now and we've paid you the VAT. Those situations, you can perhaps argue the minimum penalties down to as low as 0%, but no more than 30 of the VAT. If these are deliberate mistakes, and you only prompt them when they tell you about them, and that doesn't mean to say that when they prompt you to tell them about an error that you can't argue otherwise. It's very unlikely that it's going to be classed as a deliberate one unless they can clearly see it. But you can see there the maximum penalties that they can enforce. Areas of concern. So what they're saying is, although our experience is slightly different, when you correct something on your next VAT return, they're saying that it's not classed as early disclosure and that may be liable to a penalty. However, I haven't come across that. What we would say as advisors is, if the error is quite big, it's over £10,000, it's for you, it quantifies something that's quite big and it's going to stand out, then send HMRC a letter and admit to that error. then you're likely to get penalties and fines waived. If not, they'll be very, very small. If you don't admit to it and you go and stick it on future returns or not at all, then you're going to get penalties. HMRC Offset. So this is just a statement from HMRC where they're saying if you and the person that you're working for, you know, the large contractor, both make an error and you charge VAT, and it should have been on domestic reverse charge, they're saying that although they've had the same amount of VAT because one has paid it and one's claimed it back, they still want you to correct it. So it's not about how much money they've got. They don't want it done like that. They need it done this new way. So unfortunately, you have to then go and correct it. So in summary, obviously we've spoken about what it is, how it affects the system, invoicing, cash flow, and what it looks like on the VAT returns and your invoices. What I've done here is put together a checklist. It's not necessarily exhaustive. However, it's a good base to make sure that you're ready, and you can just, you know, print that out once I sent it to you, and just work your way down the list to just tick them off as you go. So, you know, you need to know whether it affects your sales or your purchases or both. Is your accounting system Xero, Sage 50 or Quickbooks ready? Is your invoice template ready? If you're with Xero, then yes, it is. If you're not, then you need to go and mess around with your invoice template to get an additional paragraph added. Will it affect your cash flow? And by the way, being on the cash accounting scheme and moving to domestic reverse charge, it doesn't really matter because you're not going to be charging any VAT on any sales. So you could, you know, very easily switch off of the cash accounting scheme and not really have any issues. Staff training. You know, you may be here as business owners, but you might have someone else in your office who sat there keying in things, and they need to really understand what domestic reverse charge is, otherwise they're not going to get it right. VAT reporting. Do you switch to monthly returns? You know, make that decision as a business. Do we leave the cash accounting scheme? Are we just net repayment traders now? Are we, by staying on the cash accounting scheme, not getting our money in quick enough? Contractors and customers. So you need to obviously review the contracts, notify suppliers, and verify the VAT, as we discussed earlier. And subcontractors get confirmation of end users. So you need confirmation from the people that you're working for. Are they an end user? And can they give you a statement? So HMRC are giving this paragraph. If you're an end user, then let's read it. So it says HMRC suggests that for businesses that often deal with end users, a practical way of dealing with the question of end user status will be for the business to include a statement. So, you know, that statement HMRC are giving on their website that says, you know, we're assuming that you're an end user unless you say otherwise. And that, you know, you might be 90–95% plus using end users. So they're saying that you can make an assumption, and that's an assumption to charge normal VAT rates. Unless someone comes back to you and says, no, we're not an end user, we're charging it on, can you do this as domestic reverse charge, please? So you're cutting down the amount of admin you have to do. Okay, so on to questions. So I've got that in about 45 minutes. I don't know how I guessed that one. So yeah, has anyone got any questions on any of it?
So as a contractor, we mainly deal with domestic people, so they're predominantly end users. So I need to put this statement on any contract that we have with our end users, do I?
Yeah, so that's what they're saying, is that if you put a statement on there effectively saying that you're making the assumption that our customers are end users unless they tell us otherwise, you can put that on there and charge normal 20% standard rate VAT.
And then I've got a few subcontractors that are VAT registered, so they then must include the domestic reverse charge on their invoices to us.
Yeah. Do you have anyone who's self-billing who expect you to do it?
Right. Okay.
No. Do you have anyone?
Oh, do I have? No, I don't have anyone.
Okay, so that's fine. Yeah, because self-billing's a different thing, where obviously you would have the responsibilities of changing those invoices for them, because you're the ones producing them. But I didn't want to come onto that because no one really uses it too much. But I don't know if Bradley in here might have self-billing where he does the invoices. But yeah, what you need to do is tell them that they need to domestic reverse charge the supply because they're working for you and you're not an end user.
Right. And then in Zero, do I need to amend the supplier contact element, or will it automatically do it?
In Zero.
In Zero, yeah.
Yeah. So what you need to do is it's not going to automatically do it. We will turn on the tax rates for everyone who uses Zero, who's one of our clients, and that we've targeted on the the list for these webinars. That means that the tax rates are there, but if you go and put in an invoice for the supplier, it will default perhaps to the 20% on expenses. But if you know they're always doing work for you and you're not an end user, then you can go into contacts and change the default for that supplier to the new VAT rate.
Right, okay.
Chris, can you just confirm or clarify the cash accounting system? Are you saying that you can't be on cash accounting now if you're under DRC?
No, you can. So what with that? Well, I know how it works in Zero, and I'm assuming it may work very similar in the other ones. But if you're on cash accounting, obviously it only hits your MTD VAT return when it's been attached, an invoice or a bill has been attached to a payment or receipt. However, the system turns on its head, and whenever you put in an invoice with domestic reverse charge, even when you're on a cash accounting scheme, those invoices will go in there on invoice date, not when paid. And it has a mixture on the VAT return of accruals and cash accounting transactions. I think businesses need to assess whether they are better off just coming off the cash accounting scheme, because if all of the or the majority of customers that you're invoicing are domestic reverse charge now, then it is no benefit. You can just get your money back quicker from HMRC by being on the accrual scheme. But yeah, it deals with it while you're on a cash accounting scheme. I think Claire's example, you're saying that you're going to be doing a lot of 20% sales still. And in that example, you're still going to be, payment traders, and you may still benefit heavily from being on a cash accounting scheme. And you can stay on the cash accounting scheme, and the domestic reverse charge will work perfectly if you just select the VAT rates that are correct.
Right, okay.
And I spent time in the demo company in Zero sort of testing it out, and it works. So.
One thing, Chris, that you did mention was about when there may be a delay repayment between the March and June.
Yeah, I knew that would affect you. So it may be a bit of a headache in the early days. Now, one thing that can be done is, what they're saying is, if a payment, obviously an invoice is raised prior to the 1st of March, if you know a payment is going to be received after the 1st of June, or you get to the 1st of June, what you could do is, from my understanding, is that you would let them know that you can they can pay you it net of VAT, and you just resend them the invoices
Right.
Under domestic reverse charge, because none of those, when you're on a cash accounting scheme, none of those have hit a VAT return yet, so it doesn't matter.
Yeah.
When you change the VAT rate, yeah, we can do one as a test, but I assume when you change it to domestic reverse charge, it will just take the VAT off and it will stick it onto your VAT return because it hasn't gone on one yet.
So you just edit it through.
And what it means is
options.
that actually your customers might be more likely to pay you if they're having to pay you net of VAT. Might pay you a bit quicker. I don't know.
I suppose the only thing is that if they think that they don't have to pay your VAT, they may wait till after June.
Yeah. So don't. This is what I'm saying. Don't mention it. Chase things heavily until that point. But when you've got a block of invoices from different customers that are still outstanding, then at that point it may be that you don't want to go and change them all and then someone goes and pays you with the VAT. So you wouldn't make that assumption, but you could come to an agreement with a couple of your bigger ones to. Yeah,
that makes sense. Yeah, so wait till June comes and then say to them, look, now it's in your interest to pay us, because it's, or at least the fact that you won't have to pay VAT, so you can pay me a little bit quicker.
Yeah, it's a bit better for their cash flow in the immediate. Yeah.
Good, thank you.
Okay, has anyone else got any questions?
I think I'm all right, I think.
Okay.
Just with, actually, whilst we're there, you said about the subcontracts that I invoice for. I mean, it wouldn't apply to them because none of them are VAT registered anyway.
That's fine then, yeah. So they just as normal, yeah.
And going on with the bigger contracts, then they're I'll just charge VAT anyway with them, don't I? Because they're obviously not end game. They obviously selling the services to someone else anyway, aren't they?
Yes. So you are. That means that all of it, pretty much all your sales, are going to be under domestic reverse charge. So you're not going to be charging VAT on any of it anymore.
No. Okay.
Yeah. So it may, this may affect cash flow in the short term. You need to make sure you're ready for that, because all your sales are going to have are going to be less than they were before in terms of the cash coming in.
Yeah. So, but what about is that the same for sort of private work you do at someone's house?
No. So that they're an end user. So where you're invoicing this, the big large contractor, that's going to be domestic reverse charge. All of the people's the work at people's houses, they are end users, and that's they need to be charged VAT at standard rate.
Yeah, so it's just the big contracts I've got to worry about then, isn't it?
Yeah.
All the other ones are still charging. Yeah. All right. Great.
Okay. So if we don't have any more questions, then I'll let everyone get on with their day. I'll send the Emma will send over in email the slides so that you've got them. If you've got any other questions, don't hesitate to just email them in, and I'll try and answer them as best as I can. And then for everyone on zero, it'll be a lot easier. If anyone needs help with Sage and changing the tax rates and things like that, I'm sure that we can help. However, it's going to take time to do something like that, so we can't necessarily do that bit for free, because it could be a bit of a fiddly task, but we can certainly help. But okay, so thanks for coming on, and I will speak to you all soon. No doubt.
Thank you very much.
All right. Thank you.
Thanks a lot.
Bye.
Bye.